Are you ready to take action to attain the lifestyle of your dreams?
It's a great way to make a lot of money fast.
The Clever Investor Show.
Hey, what's going on, Clever Investors? Sperber here. Welcome back to the Clever Investor Show. I am so excited for today's episode because I got one of my favorite people in real estate, the great Ken McElroy, with us here today.
Thanks, brother.
Welcome to Clever Investor Studios.
I can't wait. This is going to be awesome.
I'm so excited for this conversation. Guys, you probably know who Ken is. I don't need to read this long list of accolades, but I'm going to do it anyway because it is so cool to see a man with over 20 plus years of experience, one of the greatest educators in the real estate space, a commercial god in the real estate space, absolutely blew up too. By the way, always read your books, loved the way you taught, watched you for many years, studied all your moves because I think they're great. But when COVID hit and you came out of the gate swinging online, which I thought was cool, and you blew up then, I was like, man, this is like the greatest education for free almost.
Yep. Yeah. You know, it was funny. I was like, you need to go home. I was like, for everybody, I was like, oh, I needed a break. You know, I went home. I was like, okay, for about 2 days, 3 days, I was like, okay, now what? And so I decided to put all this content online.
And it just took off.
I was never really online before COVID, right? So we just never spent any time on it just because I was out doing deals.
Well, I want to read this real quick. For anybody who doesn't know Ken McElroy, it's kenmcelroy.com if you want to go check out his website. 20 plus years experience in the real estate investment space, an expert at analysis, property management, which is kind of how you got started, right? And acquisitions, property development, serves as an advisor to the Robert Kiyosaki Rich Dad Company, which is where I first heard of you. Because what was your first, the ABCs of?
ABCs of Real Estate Investing, yeah.
Was that the first book?
2005.
And that thing took off like a rocket.
Robert's like, you need to write a book on what you're doing. I go, I don't know how to write a book. You know, he's like, you got to do it, man. I go, you got to give me some help. He goes, nope. So anyway, I figured it out and released it. And geez, it's been awesome.
You know, sometimes the best mentors don't give you the answer.
He didn't.
They just show you a little bit of the path and challenge you.
And he was right. You know, and what I've been doing is now, you know, I didn't realize the book would be, you know, so big, and it has been. But really, what it did was it gave me an opportunity to start pumping out books and then roll them all into my nonprofit for the philanthropy. So we have a full-time director now of philanthropy that just gives away money. So all the books, all that stuff goes right back out into the community.
You have ABCs of real estate investing, ABCs of property management, The Sleeping Giant.
Yeah.
I don't know if I've read The Sleeping Giant. What's that book?
It's all EO, YPO, all business owners that started from nothing.
I love that. So what, like you're interviewing different?
Yeah, there's 20 different entrepreneurs. And basically, my requirement was that they couldn't have a rich mommy or daddy.
Okay.
And you know, they
self-made.
Correct. And so I interviewed hundreds of them. We got down to 20 all over the world, and they're just interviews on how they started, how they financed it. And by the way, no real estate stories in there at all.
Well, just for people listening that don't know what YPO is, what is that?
Yeah, it's Young Presidents Organization. It's just a peer-to-peer network on how to grow your business.
Okay, it's hard to get in. There's qualifications. You can't just walk in and say, "I want to be a part of this good old boys club," because you got it.
Yeah, 10 million in annual sales and 200 employees.
Yeah, I remember going through an interview with them, and we did not have that many employees, and I think I was doing maybe 8 or 9 million at the time. They said, "Call us next year."
Yeah, that's.
I'm like, seriously, like I'm going to hit it, and they're like, "Sorry, they're standards."
They are.
All right. You know, you've been in tons of media appearances, top industry expert. You got the real estate radio show going on. Am I missing anything?
No,
tons of philanthropy, all the good stuff.
I know. We I think last I looked, we bought about 3 billion so far.
That's it.
We own 2 right now, 2 billion. We manage everything. We're a builder. We develop. We're a contractor. So we do ground up construction, and really we're long-term hold too. So all predominantly multifamily, but some commercial office, some self-storage, a lot of land development.
All right, so let's kind of unpack all that, because the point of this show is obviously making lots of money and teaching people how to make a lot of money, but more importantly, multiplying your money. That's where the multifamily comes in, and buying assets, making your money multiply, and then keeping more of it. How do we live tax-free,
Yeah,
baby?
no kidding. Yeah, and by the way, it's possible. People don't realize, like I didn't realize. When I first started making money, I was paying out a lot of tax. And, for whatever reason, you have this mindset, it's the American way. Well, a lot of people still believe that. But the truth is, the government pretty much tells you what to do. They do. They say, we want this, we want alternative fuel, we want housing, we want oil and gas. And then they give you tax credits for it all. So if you just do that, you could legally make a lot of money and pay very little, if no tax.
Do you pay taxes?
No, I haven't paid tax in, I don't know, at least 15 years.
Why do you think Trump was hesitant to say, I don't pay any freaking taxes? I'm a real estate guy?
Well, I watched like everyone watched. He's like, well, you don't pay any tax. He says, because I'm smart. And then Hillary Clinton, he said, well, you won't do anything about it because all your donors do the same thing I do because it's legal. And that's why when all the tax returns came out, they went away. If there's been
nobody
nothing.
really made it. They made such a huge deal out of it until they finally came out. And then
gone.
It was like,
right.
Oh, I had it.
Yeah, because depreciation, cost segregation. We were talking about it before. Like when we had a big cash event. One time we sold a bunch of stuff. We just bought a jet, and the jet pays. You can write off the jet in that same year, and your whole thing, even if you finance it. So there's all these rules and tax laws that you can use to not pay tax if you're paying attention.
So let's and then the last part of this podcast obviously is, managing your money really well, living tax-free. Sometimes it's like, do I scale my business and make more income, or do I just keep more of the income that I'm already making? So It's that philosophy. And then the last piece is, how do you make your money matter? And you kind of started with that, saying you have what did you call it? A nonprofit.
Yeah, that came later. I used to be like a lot of people. I was a check writer, and then, I would tell everybody, I'm doing all this stuff for charity, and maybe go to a golf event or here or there. And I was like, you know what? This is all rookie shit. So I remember what happened was my very good friend got cancer. And he's like, Kenny, doesn't look good. And he was running a autism walk here in Arizona, big one. It's about 10,000, 15,000 people that show up. He's like, would you chair this for me? I need to go into chemo. And that was it for me. That was maybe 10 years ago. And I was like, this is way better. Like being around the, like people that are affected and hearing their stories and all that. And from there, I just, like anything, like you do, like in business, I just became intentional. I said, I'm going to create a whole foundation. I'm going to hire somebody. I hired the girl who was, she was the head of Apollo Group. She did all their nonprofit. And then she was at Arizona State. And now she's with us, and she basically, it's employee run. We dump a bunch of money in there. There's all kinds of ways.
What's the purpose of it?
It's literally to give back to the communities. So like during COVID, we gave a lot of money to food banks, and actually even to our own employees. But primarily it's, now we're doing 50, 60 different charities. But we usually do like 100 to cystic fibrosis, 100 to autism, and we spread it around now. So it's getting interesting because it's getting bigger.
Yeah.
But it's really, really, really fun. And what I learned, Cody, is it became a segue for people to want to work for us. I started off with this little thing over here where I was just trying to donate money. And, my buddy says, you start off, in your learning years, and then your earning years. And then third is your returning years. So I'm in my returning years. And what happened was my employees, people started coming there. We like what this company stands for. And, we do a lot of stuff kind of under the radar. It's been wonderful. And my head is always there, like the book stuff or the speaking stuff or whatever I'm doing. Even last year for our Limitless event, I took the money that we made and I donated it. So it's just awesome.
Yeah, it's brilliant. And I love the impact when making money, having fun, and making your money matter. It's like the full circle,
so
that's great that you're doing that. Fun. But first, let's teach people how to make some freaking real money, right? When you say things like, I have 3 billion, 2 billion, it's like to somebody who's just standing there at the 1 yard line, staring off into the abyss going, yeah, but I don't know anything about multifamily. I don't know anything about commercial. I barely even know how to spell the word real estate. You started off in property management.
That's fair. Yeah. My dad was a contractor. My mom was a hairdresser. I grew up very blue collar. We weren't expected to go to school, college. And I went on a wrestling scholarship and I ended up managing an apartment building for free rent, period. That's how I got into property management. And the company I was working for asked, I was like, after I was graduating, I'm like, this is fun. The guy's like, you need to go get your real estate license. You need to go, and so that was my first and only job was with that company. And
how big was the apartment complex?
that was 60 units.
All right. So there's you living in one of them. You got 59 tenants that you got to babysit.
Absolutely.
And you cut your teeth, the hard school.
I'll tell you exactly the best part. Like, so again, I grew up in construction and I knew how to do stuff. And, I wasn't afraid of any hard work, which is, how I grew up. So a unit would vacate. I would go clean it, paint it, rent it, and all that stuff. I didn't ever vend. Like, nothing, like even, and so the owner came by about, 4 or 5 months later and it's full. I'm like, well, this is a lot easier if there's 100% of the tenants are paying rent and I don't have to, show units anymore. So that was my whole goal. It was property management is pretty common sense, really. So he came in and he's like, dude, this is awesome. He
loves you.
Yeah. And I was like, I'm on the wrong side of the desk,
Well, and if nobody pays, you're on a wrestling scholarship. So you're just going to go ruffle some feathers. Yeah. Give me that. We need that rent, buddy.
I did get in a bit of that. So, but that does happen too. It wasn't in the greatest area, but yes. So, and then with that company, I ended up managing a bunch of properties all up and down the Interstate 5, which is I'm from the Seattle area. And they were all small, man, 4 units, 8 units, 12 units, 20 units. There was all, because the company at the time was growing. It's a big company now, and it's called Pinnacle. But at the time, it was very small. It was called Goodman Management Group, and it was owned by a guy by the name of John Goodman. And he's a billionaire, and he still lives up in the Seattle area. But just a great mentor, So he had brokerage, he had property management, he was buying stuff, and I got to see from that lens. You imagine this. As a 20-year-old, wet behind the ears, these ownership groups, they were putting together partnerships. They were coming in, they would give them to me. They go, go fix this. And so I would go manage that, fix it, whatever. Sometimes they would, be in bad shape, and sometimes they didn't do their due diligence when they bought them. And so that was about 8 years. And so I managed maybe 25, 30,000 units while I was there. And you just, all sizes, all locations, and some were new, some were old.
The schooling, the knowledge you're gaining going through
so good. Yeah, because, they don't call you if you distribute money, and they call you if you don't. So, you pretty much learn quickly on what works and what doesn't work. And that's actually, in my opinion, that became my secret sauce for when I started to buy. Because a broker would give me a deal, and I'd been down this road so much through property management. I was just looking at the numbers. And I'm like, okay, I got this. I know how to create value in this rent roll. I know how to create value in this financial. I could see it even before I went on to the building because I had done it so much. And so when I actually got the courage, and because I didn't know how to buy, I didn't have any money, I didn't know how to negotiate anything. And once I got the courage to actually go do it myself, then I realized that the power was actually seeing the deal that nobody else saw, and then being able to put the team together to fix it.
Now, would you recommend somebody who's just getting into and aspiring to maybe do multifamily on a bigger scale to maybe start with property management like you did?
Yeah. So here's what's happening now. There's a lot of syndicators that have been out and, raising a bunch of capital, all that kind of stuff. And they actually don't know what to look for. They don't know the language, and there's a serious language in property management of things to look for. And so what, they don't, when they're firing somebody or rehiring somebody, they oftentimes don't know what to ask. They don't know what to look for. And sometimes they just make a lot of bad decisions. So when you have all of that, those tools in your tool belt to be able to hire somebody or manage your own, you learn a lot. And if you're gonna raise capital and do it at a pace, which I think anyone can do, by the way, you have to know. You have to know the nuances. It's not a transactional thing only, right? I mean, the money and the close, that's the easiest part. The hardest part is identifying it, uncovering all the stuff during due diligence, putting a business plan together, creating a value add that's a win for the investor and for you, and then executing. the money is actually the easiest part. In all honesty, in my company, that came in the last 48 hours. The minute we would put a business plan out, we would raise the capital in say 48 hours.
So you weren't pre-raising. You were more like, hey, listen, if the asset is good enough, the money's going to gravitate towards it.
We never pre-raised, not one time.
This. It's funny because I just got I was hanging out with Vina Jetty, who's a good friend of mine and one of my multifamily mentors, and she was like, "You want to start like raising now?" And I had the opposite feeling. I'm like, man, if I could just kind of like what you were saying, if I could just find a really great deal with my marketing capabilities, I'm going to raise capital. And she was kind of pushing back on that, and I was pushing back on her, and so it's kind of interesting to hear you say that because the reason I asked is there's really like multiple businesses in the multifamily space. You got the property management, you got the fundraising, you got the asset management, you got the building or construction side of things. Like there's a lot of businesses within the main business. And sometimes when I'm talking to somebody new or even me as I'm transitioning hard into this side of into the space is like, well, how do I make money? And if I go try to buy something, even a 40 unit, let's just say, it's going to take me a while to like pull it all together and make money from it. And how do I survive along the way if that's my full-time thing that I'm focusing on? And it's like, well, maybe pick one of those 4 sub businesses and do that as your job while you're trying to put the rest of it together.
Yeah, I agree. I'm a big believer that I think people invest in, the deal, especially in the beginning, maybe after you're rolling, there's a lot of people that throw money at me now because of my track record. But in the beginning, certainly in the first 5 years, you just should. What actually produces the money for all of it is the deal itself. So if you can find something where you can create massive value in it, people make sense. It's just math, like literally, So that's why I don't necessarily need the money first. To your point, I just need a big list of people that will take a look at the deal when I feel like I have one. And that's a way better. I'd rather have the pressure on me finding deals than me having money and finding deals.
So let's talk about kind of like what is a deal to you? Like right now, when you're out there in the world today, because the world's kind of crazy right now, is there certain cap rates you're sniffing around for? Is there certain types of assets? Like what would get, what's your buy box? What would get Ken excited?
Yeah, good. So I've been all over the map in my history, and I think that the lane I'm going to stay in is the multifamily lane, over 200 units, and then we have specific locations that we like. So when we go to an area, unlike a lot of people, we make sure that the employment's strong, the population's strong, the migration patterns of people going there are strong, the school system's strong, the crime's low. There's a whole checklist of things that we do internally to determine even if we go somewhere. So that's number one. Number two, we draw a circle around that within a certain period of time. And then we start to look at the number of units in the area, how vacant they are, and all that kind of stuff. And the volatility of the employment and all that stuff. So the base, we want the base to be there long-term. So once that's done, then we go look for things that, we always say it has to have a story. Whatever the story is, we don't really care what the story is. So I'll give you an example of the last one I bought. I bought a 230 unit just north of Dallas, which I love the area north of Dallas. It's a Plano, Frisco area. And the owner had it for 19 years and didn't touch it. So, so it's got 19-year-old appliances, I'm generalizing, but you get the point. So he hadn't put a lot of money into it, and they owned it a long time, and they decided to sell it. So I look at that and I'm like, okay, I got $500 a month in rent growth. He's running a whole bunch of other expenses through it. The manager's, flat or lazy, let's call it. He's had them there for a long time. So there's all these, things that I call forced equity. So it has to have forced equity. So that's the story. The story is, I can't remember what we paid, maybe 30 million. So maybe 30 million. And when I fix all of that, it's going to be worth somewhere in the mid 40s. Okay, so that's the story. So once I package that up and prove it all out, then we put it into a business plan and we give it to our list. And we say, hey, we're buying this for 30. We think it's going to be worth in the mid 40s. And this is how long we need your money. This is how much money we'll make in between. And this is what I think will happen when we do a cash out refi. Because as you know, I don't like to sell. I like to hold. The other thing I do is when I raise money, and like a lot of people, is I'm behind all of it. So let's say it's a $30 million deal and I need $10 million. I make money once I return the 10. So my motivation is to return the 10.
Got it. So wait, you're not even really getting paid until the refi happens?
That's right.
Interesting.
Yeah.
So are you getting a fundraising fee from the fund or anything like that? Or let's back up a little bit just so people can walk with us if they don't know this business yet. Are you doing a GPLP kind of structure where you're raising capital? So that's why you're sending out this marketing material. And maybe on a $30 million purchase, you're raising what?
About 10 million, let's say. So maybe 1/3 down and finance 2/3.
Okay. And for that, what is the kind of pitch? Is there a certain pref that you're offering?
So yeah, so what we do is it's a good point. So we don't do a fund.
Okay.
So what we'll do is literally the business plan stands on its own. So we only need 10 million. That's it. So the business plan goes out and then people come in as an LP model. I'm the GP. Now, also I put money in. So I'm usually 250 to 500 on every deal. So I'm alongside of all the money. And because we're trying to do multiple deals, that's why you syndicate. I think you syndicate to spread your money through a bunch of projects, not because you don't have any. And so we have money in every deal. And obviously our LPs like that too. So I'm sitting right alongside of everyone's money. Then really the deal, I just have to perform to the business plan. So if let's say that's a 3-year time frame, because on a 230 unit project, it's going to take me at least 2 years to turn those units. So after with normal turnover, so now the net operating income's higher, the rents are higher, the place is looking better. We probably have a better tenant profile. I've managed the expenses down where they are. I take that to the bank, and let's say the thing's worth 45 million. Now that's I want a $30 million loan on a $45 million value. So I take that 30 million loan, I pay off the original 20, I pay back the 10 that I got from the investors, and now the investors are in for nothing. That's an infinite return. So the investors now have no money in the deal. Now I'm starting to get my percentage, whatever it is, based on whatever the cash flow is. So I've also made money on my, let's call it 500 grand that I've invested, but I've also given everyone their money back.
Including yourself?
Yeah.
Nice.
Yeah. So everyone gets their money back. So the way we do our preferred returns is, oddly enough, I don't have a strict model. So what I do is if that 230 unit was kicking out 5% cash on cash, that's what it is. I'm like, you guys can have 100% of the cash. I don't really care. I just want the 10 million. So I want to be able to pay something out. If it's 6, I give them 6. If it's 7, I give them 7. So when I'm looking at a deal, I'm looking at how much the deal produces. And then I'm giving that to the investors, which I am in. So, and the real juice of from the squeeze is the GP, right? So the GP deal. So let's say it's a 50-50 deal.
Is that normal? Is that kind of like your goal? Like
You would never do anything, let's say, under 25%. But
I know a lot of people do like 75-25 or 70-30 or something.
We've done that. We've done 50-50s. And, the thing is...
50-50 sounds a lot better for you putting this deal together.
Well, think about the difference though. So on a 75-25 deal, if somebody's participating, then they get less. I'd rather bet on myself to get the 10 million back. So then at that point, what LP can bitch? If I'm 50-50, I'm not taking anything. And I'm on the come, so I'm in year 4. I'm not making money till year 4. I'm totally fine with that. But now I'm 50-50. So when that deal now produces 500, 600, 700,000 in cash flow, I get 50% of it as opposed to 25%. So for me, I'm playing the long game, not, I'm not trying to make acquisition fees and all that kind of stuff. I mean, I am, obviously we got to keep our company going, but that's literally just for operations.
We had Jerome Maldonado on here. Do you know Jerome? He's a builder. You should get to know Jerome. He's got about 1,000 units that is already making money. He's got 600 in production. He's a builder from the ground up. He's been
Nice.
He's been building multifamily for about maybe like 6 or 7, 8 years now, and he's really getting into the swing of things. Got a bunch of projects around town. But anyway, he uses debt. He doesn't syndicate.
Yeah, so we have 6 under construction right now. I have 1,500 units under construction. And, there's lots of ways to finance that, right?
Yeah.
And, construction is a little risky right now with the interest rates.
I was going to ask you, like, how worried are you on the back end to refi out or even get construction loans?
Yeah,
That makes sense.
I'll give you a quick story. We have a 330 unit under construction down in Marana, just outside of Tucson. And we were $7.5 million off what we thought it was going to be.
That's it?
Right.
That's it? Just a small rounding error?
So
that's a big number.
It is. Yeah. So my partner Ross and I funded that. And then, but that's part of it. Like a lot of people don't talk enough about that.
What would you have done if you don't have $7 million?
Well, you can dilute.
Capital call?
Yeah, you can do a capital call and you can dilute guys and all that stuff. But I've never capital called in 22 years, never capital called once. So we didn't want to.
It's a selling point.
So yeah, so again, though, this is just the other side of it. This is stuff that not a lot of people talk about, but it is a fact. So, but we also thought it was going to be worth in the mid 80s, and we got an appraisal. It was like 108 or something. So so the value.
There's some light at the end of that tunnel.
Maybe we're not quite. We open in July, so we're right in the middle of this, and we'll see. You open in July, then you lease up, and then you go to the bank and you see what the rates are at the time, and you see what the loan to values are at the time, and what the values are going to be at the time. So, but at the end of the day, it's a $7.5 million loan that we put against the project, so we don't dilute our investors, and that's it. And that happens. It does happen. So I am concerned about construction.
I just heard about a group out of Houston that got foreclosed on, a big group. I don't hear about many multifamily major foreclosures, but I feel like it's coming.
It is. Oh, yeah. I tell everybody, we're probably in the second or the third inning of a 9-inning game. In all seriousness, yeah.
So let's unpack that, because we're part of 2 multifamily deals as LPs, and both of them stopped the pref. And one of them was even considering a capital call, and we were pushing back on that as investors. We were kind of like, what the heck is going on over there? It was only supposed to be a 20-month turnaround or something like that. And it's turning out to be a lot worse than that. We're going to end up holding it for a while. And in order for us to get out of the current debt structure that we're in, there's probably going to have to come to the table or sell at a break even, maybe even a small loss. Who knows how this thing's going to play out? And I know a lot of people that are really nervous about the next 24 to 36 months. So what's your outlook on the commercial space with rates?
Sure. Well, so first of all, in the commercial space, you've got what I look at is I look at office, retail, industrial. I look at multifamily. I look at all the different classes, and I think that's important because each one's different. So like office right now is getting hammered, right? People are, their leases are renewing and they're downsizing or just not renewing or whatever. So you got this commercial debt side of the business. And the reason I bring that up is because these are the same people that finance multifamily. So, the Berkadia or CBRE or Walker Dunlap or whoever it is that you're going with, they're financing office, they're financing retail, they're financing multifamily. They have a whole portfolio and a whole allocation strategy. And the reason why that's important is because if a commercial office building is defaulting, which they're starting to, it affects that lender. And so they're, so everything's on watch right now, right? And the same thing on retail with direct to consumer and all that. Those are all potential issues. But specifically for multifamily, the real issues that people are going to have are if they have variable rate or bridge loans, or they did some kind of value add. When you said that, they're not paying the pref, it's still accruing. So the pref is still accruing. So even though the syndicator or the GP isn't paying it, it doesn't mean it goes away. So what a lot of times people forget is that there's a cost for the debt and there's a cost for the equity. The cost for the equity is called pref. The cost for the debt is called the interest rate. So, that's it. So there's a cost. So whether the property produces it or not, that's why I was telling you earlier, when I do my pref, I solve to the cash flow. So, so I'm making sure on day one that thing's cash flowing 5%, 6%. And that's why I don't have a standard deal. That's why I don't raise money at 8 or 9%, because why would I want to be negative? Why would I want to be behind that? I don't. So, so that's been our philosophy, is that the property should pay the pref. Now, if they can't pay the pref, it's probably as a result of the interest rate going up on their variable rate loan. And that's actually the big issue that a lot of people are having, and not just in multifamily. So we had 6 deals that we were doing. By the way, we owned already. So they're internal deals. There weren't things that we went out and syndicated on, but they were deals that we did a cash out refi, and we're putting the money back into the property, and we're growing the rents again. So I have properties that I've owned over 15 years, and we've refinanced 3 times. So, but you would do it at a variable rate. And some people would ask, well, why would you do a variable rate? Well, because you don't want to put a fixed debt on something that is undervalued. So you do a variable, and then you put a bunch of money into it, just like I was saying before in that 230 unit. So it's the same thing. So you wait until you've actually proved out all the value, then you put the fixed rate debt on it. So all the people that are caught between the fixed rate and the variable rate, they're the ones that are in trouble. And the other side of that is that cap rates are also going up. So as interest rates go up, cap rates go up. So if a capitalization rate is 4% when they bought, or like everyone a year ago, let's say, and they've gone to 5, that means that your property is worth 20% less. If you take your same NOI and you divide it, 4 to 5 is 20%. So that's a 20% loss of value. Now it's just in paper. It's irrelevant unless you have to sell, right? So if you have to sell, that's what you're going to get for it on the open market. But if you can wait, maybe cap rates, come back down to 4 and interest rates come down again. But what I find is a lot of people, they have loan maturity issues, and they have other things that are forcing them to sell, even an equity partner. So a lot of these guys have used big equity partners, like, let's say, BlackRock. So BlackRock, gives me money. They want it back, in 3 or 4 years. They don't care about the market. They want it back. So then now you're negotiating with them on when to get it back. So that's not a good position to be in either, because as markets come up and go down, I have a good buddy that bought a whole bunch of stuff in Denver with a big company like that. And he's like, Kenny, our equity group wants us to sell. And he's like, the market's like not ready. It's like, we're just turning and we're about ready, to grow 2 or 3 more years is what I need. And he had to sell. So that's how managed money is. So you got to be careful.
Like you don't have a choice if they put the pressure on you.
100%. Yeah. That managed money is it's a tail wagging the dog for sure.
So overall, do you feel like the next 2-3 years there's going to be a bunch of people defaulting, a bunch of new property coming on the market? Are you sitting on the sidelines with like dry gunpowder?
Yeah.
Like what's your viewpoint of it?
Well, I don't think everybody. I think it's going to be property specific. So I think everybody's. I think if you've got a new construction project, you potentially are at risk, because you can't finance something with a fixed rate debt that doesn't exist. It's land plus, framing and drywall and all that. Once it's done in full, then the bank has something they can wrap their head around. At that time, that's the rate. That's the loan to value at that time. So there, if somebody broke ground on something 6 months ago, you got another year and a half, right? You got to finish it. You got to deal with all these supply chain issues and all these labor issues and all that stuff. And then whatever it is, good. The good news is rents are going up, and but so are expenses. But rents are going up faster than expenses, which is good. So you're going to have that. Then you're going to have the people that have that don't have fixed rate debt. That's the next problem. So there's a reason that loan is maturing. So a variable rate, most of those rate caps, if they bought them at all, because I heard a lot of people didn't buy a rate cap. So anybody who knows what a rate cap is, a year ago, you could get something at 3%, let's say. You could put a rate cap, but it's just an insurance policy, so the rate doesn't go. A lot of people didn't buy those. At the time we bought them, they were $25,000. Now they're $1 million to renew. So in just 1 year. So it's just an insurance policy to cap the rate. So it's just a game of math, right? So,
And that's just a fee.
Yep.
But you just cut the check and lose it.
Yep.
And that's just part of the cost of doing
that's
business.
That's one way to hedge your rate cap. Yeah. So some people bought rate caps, some didn't. The ones that bought them, they're usually a 2 or 3 year maturity. So, let's say they started buying them 2 years ago. Some of the rate caps are going to be up this year and next year. So that's what you're going to want to watch. You're going to want to watch the big equity that wants their money back. You're going to want to watch debt that's maturing, and you're going to want to watch new construction. Those are the three for multifamily. And the truth is, most of these people, they didn't do anything wrong. The market, what changed was, the supply chain went crazy, and those construction and renovation costs went up. Expenses are going up, and interest rates went up. So that drove cap rates down. So the lenders are now doing 55% loan to value. That's all.
They want you to come to the table a ton.
Yeah, they want to leave a lot of equity in there. Yeah.
Where you get, are you going on LoopNet
No.
for hours looking for deals? How are you finding really good deals right now? These all relationship driven?
No, not really. Well, yes and no. So LoopNet is a great resource, but not really. It's kind of where everything goes when there's
after you buy it, we get the leftovers.
Yeah, everybody.
Right.
Yeah,
I see what you're saying.
But and there's really no such thing as an off-market deal. So, there are people that are talking to people all the time and say, if you bring me something at this price, I'll consider it. But then what happens is that particular seller just goes out and does a BOV anyway, and puts it out to bid. If you've got a group of investors like we would, let's say, you wouldn't want to do a off-market deal. The right thing to do is to go out and put it out to market, because on one push of a button, if you list it with like CBRE, it goes to 5,000, 6,000, 7,000 people, and that you want that kind of, you want that to happen for your investor group. And
it's like almost your fiduciary responsibility to market it as hard as you can.
So we play in that arena. So we have a full-time acquisition department. We have analysts in-house and all that.
Yeah, what does your team look like?
Yeah, we've got about 300 roughly. That's including our property management company. So we have a development company, a renovation company, construction company, and the property management company are our four main big businesses. And majority of the people are in the property management company, but our corporate office is maybe 50, 60 people.
Are you running all this? You hired a CEO to?
Yeah. We've got a CIO, CMO, COO, all the C's.
Just curious. I mean, this is me being selfish. I want to know how to scale. Give me a ballpark range. What are we paying some of these people?
Depends on who they are. So, somebody really, really good that's strategic, you're going to give them in the mid twos probably as a salary, and then probably some kickers for performance. Are you
cutting in on them on any of the equity of any of these deals?
Yeah. We have a vesting deal where they have to be there a while, and 6 years in order to participate on I give up GP side of the house for sure. And
that would keep good talent around. If you're out there building $1 billion empires, they're like, hey, can I take a ride with you?
And honestly, the people who are in that game, that's their next step. They're already high paid somewhere. They're already killing it somewhere, if they're performing, you have to come with a deal for them to move over.
Where do you find talent like this? Are you stealing them from other people? Like, somebody's having regrettable turnover, and you're
anybody
scoring?
That's doing a good job is employed. So it's pretty much you have to identify them, and they're never ever on a resume somewhere. They're always working somewhere, really high up, and they're producing somewhere. So it's a big loss for somebody. And that's why culture is so important too, because like we just hired a guy that is our CIO, and he was in Dallas, and he did 50,000 units of acquisition. So he was head of acquisitions for this big group out of Dallas, big, very, very good company, and and so in order to get somebody like that. when he started, they had 5,000. So, he
took the ride.
He orchestrated the whole thing. Him and a whole bunch of other people. So in order to attract somebody like that, it's a 4 to 6 month negotiation. It's back and forth with attorneys. It's profit sharing. It's, GP, LP. It's succession plan stuff. It's all of that because he's probably in his early 40s, just slated up to that point, and he's looking for a home, an anchor, a way to take it to the next level. He's probably made $500,000 to $1 million a year, with everything over the year, but he wants to take it to the next level, whatever that is for him. And so that's the kind of deal you got to cut for that person.
What does your daily routine kind of look like? Let's step out of the real estate thing for a minute. Just how does a successful person like yourself operate? Are you... So many of our listeners reach out and they ask us how they can get involved in my actual real estate deals. Our investment firm specializes in finding deeply discounted properties, acquiring them, renovating, stabilizing both single family and multifamily properties all over the United States. That's why we're so excited to share with you clevercapitalfund.com. Now, if you have some investment capital and you want to deploy it and receive double-digit returns backed by real estate, then visit our website and see which fund is right for you. We have both equity funds and we have debt funds where you just get paid out every month like clockwork. All you got to do is visit www.clevercapitalfund.com today to learn more. Like you're doing a bunch of meetings every single day. Are you running this? Are you Elon Musk? Everybody get your ass in the office. We're doing this in person. None of this remote BS. Like, how do you operate each day? How much is protected private time versus like, hey, I'm all in? Somebody asked me one time when I was a lot younger, how often do I work? And my answer was always 24/7 because that was my energy at that time. Now it's a little bit different.
Yeah, it's very different for me. I it's funny. Like, so my actual company, I run on Tuesdays. That's it. So I'm on the EOS platform, Entrepreneur Operating System. That we've been on that for 3-4 years now. So I run a 90-minute executive meeting. I run actually, I don't run the investment committee meeting. Our head of acquisitions does. I run a partner meeting. And that's pretty much my Tuesday. So from there, if it's set up correctly with the right KPIs and the right goals, and the right quarterlies and annuals, that should be all you need.
You can run your whole operation from one day.
I mean it. Like if you set it up correctly, first of all, like my regional property directors, I've been having meetings with them 1 hour. They get 5 minutes. They get 5-minute updates. So I have 7 of them.
It's like, take your information, make it concise, and hit me with it in 5 minutes.
I'm like, well, they're all on one call, all on Zoom.
Yeah.
So they're all up like the Brady Bunch sitting up there, and I'm like, okay, you first. And they're like, I'm like, give me your biggest challenge and give me your biggest win. That's it. I write down all the challenges and they go around the table. And then we have like 20 minutes to be able to talk about the challenges. Sometimes I have to do that offline.
So you're almost masterminding them. You're like, listen, we're gonna get right at the biggest things.
That's it.
And then everybody's going to dogpile, and hey, let's solve this.
I leave them to do their thing. I give them the support they need from the corporate office. I hear about that if it's not there. And it hasn't been there, which leads me over to training or leads me over to HR or leads me over to accounting or whatever. And that's what I fix. So I believe that our corporate office is there to support the properties and the investors. And so that's how I run that. And it's pretty efficient,
EOS, that entrepreneur operating system, is that the Rockefeller Habits book, the scaling?
I know Vern Harnish.
Is it the Vern Harnish book, or is that a different system?
It's kind of like that. It's a little bit different. But by the way, in order to set up we do a strategic planning session 2 days, once a year, where we set all this up. So
meaning like a coach comes in
100%.
And there's a qualified EOS coach that comes in and says, listen, we're going to make some modifications, make sure everything's dialed in for this next year.
Yeah. So what we do in that meeting is, so that's one day a year, 2 days. 2 days, one time a year. And everyone commits to that. So in that meeting, our CIO, our CMO, our CFO, our CEO, like all that's, and then me and my partner, Ross, and our head of construction. So we are in there. And in that meeting, we look at our 1 year, 3 year, 5 year, and 10 year goals. And then we set up everything in quarterly goals. So in that, literally everyone's got a quarterly goal. And this is all facilitated by somebody. And then we flush out what we call IDS, which is, identify, discuss, solve. So whatever that might be. And that list could be 30, 40, 50 things, and everybody's got them. And then we just, we just say, okay, which one's the most important? 1, 2, 3. We solve, and we're just solving, but we're keeping everyone on track on their quarterly goals. And that's how we run the whole business.
I love that. Now, what do you pay for a consultant like that to come in?
$8,000 a day.
So 16 G's?
Yeah, I think that's about what it is.
For 2 days in office. And then is there other fees throughout the year?
No. There probably is a fee for the software. They have it's called Traction Tools.
Yeah. Oh, Traction. That was the book I was thinking.
Yeah,
Traction.
Yeah. Gino Wickman.
Yeah.
Yeah.
The reason I'm flushing this out, because I think this is really important. When people are, a lot of people listen to this at different levels, but it's like I got to this point, I'm a real estate guy. I start real estate. I get good at real estate. And then I'm like, I'm going to start an education company. It's like the death of all entrepreneurs because we think we could do everything. I don't know anything about education, but I get into education. It starts scaling. It starts taking off. Real estate's for what I was doing in the single family space, it wasn't that many people. There was a small team of us and we did the same thing over and over and over. Education, I woke up one day and I had 85 people working for me. And I'm like, I don't know how to do this. I'm a real estate guy that's now playing CEO of an education company. And we were scaling so fast and we were making so much money so quickly that the wheels were falling off as fast as I was making sales. My whole philosophy in the beginning was sales cures everything. Just fucking make money and I'm going to figure it out. But then I started doing dumb shit like throwing money at problems versus really figuring out okay, I got to step back and get plugged into a system. So it took me to the point where everything was breaking and I was actually starting to fail.
Yep.
Before I read Vern Harnish's book or started thinking about bringing in really good consultants, getting plugged into a system. And that's why I wanted to kind of unpack that because it gave you this framework that made it easy for everybody to get behind. And it's obviously working.
It's hard, but to your point, as an entrepreneur, you don't know how to do any of this. I didn't know how to hire a CMO, a CFO. I didn't even know what a CFO did. All that stuff. You have to break through all those things. And then you have to find people. What I found is that there's a lot of really smart people out there that can help if you let them, right? And you could go crazy with consultants too. But for me, the EOS came out of the YPO EO arena, and and a lot of people had used it. We kind of stood back and kind of waited to see which one we wanted, and that's the one we jumped on. It's been good. It's not perfect, but it's pretty darn close, And we kind of run it a little bit modified, but to your point, now everything should happen in the 90 minutes. What can kill a company, in my opinion, there's a lot of things, are the side BS, the side emails, the side chatter, the side this, the side that, the side that. So you have to get disciplined. You have to say, listen, let's bring that up on Tuesday. That's it. Hey, this is going on. I got this thing happening over here. Okay, bring it up on Tuesday. We'll make it an IDS. We'll discuss it as a team. Because what happens is I'll talk to you about something. And
what does IDS stand for?
Identify, discuss, solve. And
That's
so and so what happens is something that could be simple, especially in a big company, can get super political. So I was just bring it in. Like one of the things that I was pissed off about was we had a company that was doing all our rent, figuring out our rents on all our properties, and I didn't like them. They weren't doing a good job. So we would renovate a unit, and the manager, it would tell the manager what to rent it for, and it was always below market. So I got pissed, and anyway. So rather than me attack the company and get into all these details, I just brought it into that bigger picture. So I said, listen, this is the problem, and then everyone's discussing it. And as you know, it's better off the more people you have looking at something and looking at it very differently, is better. And then typically whatever I thought I was going to do comes out a little bit better, by having more input on it. So I just save everything for that 90 minute meeting, no matter what it is. Even if I'm pissed about something or an email or a vendor or whatever, even a project. I just bring it up.
You force it into the system.
I forced it into the system. Then everyone's dealing with it at once, because it does affect accounting. It does affect marketing. It does affect HR. It does affect renovations. Like it all affects everybody. And so instead of trying to do all things, in a silo, and so it does take a little bit of work to put everything in there.
You mentioned, is your partner Ross?
Yeah.
How long have you guys been partners?
22 years.
Okay. So I've been partners with Bryant. We've been best friends for well over 15 years. And now we're on our 5th year, pretty much. We're going into our 5th year. Being partners has been fantastic. It's a great relationship when you really know somebody, and you're doing it for more than money. I care deeply about his family. He knows everything about me, and it really is a bigger relationship than just business. How many of the people you started with are still with you?
Gosh, a lot. Yeah, a lot. So I don't even know. It feels like most of them. I mean, we don't have a lot of turnover in the corporate office, so I would say most. But some retired. like we had.
That says a lot,
HR
though, dude,
and
because
people, and
not always when you're scaling companies to the people you start with, you end with.
Yeah, I find that's usually my fault. So what I mean by that is, I think you got to hire slow and fire fast, and I think I think most people do the opposite.
Oh, 100%.
Yeah.
Especially, so what I've experienced is, at first it's this core little team, right? The culture's on point. You're making sales. The energy's on fire. Everybody's dialed in, and you're nimble, and you're not gritty. You're what's the word I'm looking for? Like where you're my mind went blank. Where you just figure things out, right? Whatever that word is. Gritty. That's the only thing that came up for me. And so you're scrappy, right? You're figuring things out. And over time, as you start to make more money, things operationally start to go wrong. So then now you're like, okay, we got to hire somebody to fill that gap.
Yeah.
So then in the beginning, you can be the person that maybe is involved in that hiring process, the training process, the culture transfer process. But at 30 people is like, for me, that was the moment things started to come apart. Because at that point now, I wasn't involved. My people that were maybe in my management, they were now hiring, and they were transferring the culture. And then when we got to 60 or 70 people, then it was like down line, they were hiring and transfer. And I lost my voice.
Yep.
And I lost touch with what was really happening with everybody. And the wrong people were in the wrong seats of the bus, but everybody saw the money. Right. And this is where things started to fall apart for me. And I was like, oh my God, how do I create alignment? And what I realized is, as a company, it was very clear what we did. It was really clear how we did it. And like Simon Sinek says, eventually you figure out why you do it.
Yep.
The part I was missing, and this is the part that I want to drive towards, is what's in it for the people that you employ, your team members, if they do it alongside with you. If you could put that really talented person in the right seat of the bus, give them the resources they need, and get alignment, that's where the velocity comes from. That's where the longevity comes from. And you stop with the culture problems. You stop with regrettable turnover and people stealing your best people, because they're like, dude, I'm already locked in. Like how you were saying, we spend 6 months flushing all this out so we don't have a divorce.
Right.
You're putting in the work, hire slow.
In the front.
And then if it doesn't work out, hey.
In the front end. And we've certainly made mistakes even then. But I think, what we try to do with the EOS model really helps. So one of the things that we have in EOS is called an accountability chart. So in the accountability chart, it's literally just a flow chart, which a lot of people don't really look at too often. They do it every once in a while. We look at it a lot. So I'm always taking a look at, like, my CMO as an example, which by the way was at Tony Robbins for 10 years. And so like her, how many direct reports does she have? Does she have 5 or 8? It's a big difference. And of those 5, what are they very specifically? So, so I'm looking at very, very, so when I go into my accountability chart, I'm looking at exactly what the person's doing each and every day. And they know. And then actually it becomes very simple. And then so we had the same problem, Cody, where we had another layer in there, right? So what happens is people, and they're well-intended, they hire more people because they think they need more people, right? And or they hide behind software. That's another one, So I think so. What we do is we always are cognizant of our accountability chart. So we have, for me, I have the 7 people on my executive team, and that's it for me. That's enough, right? And then they have 5 to 7 people under them, and that and so we just push this all the way down. Where things go sideways is where people take some of their best people, or we've done it. We've made this mistake. Where you take somebody who's really killing it, they've been with you 10 or 15 years, and you just keep loading them up with stuff, and then they burn out. So, so that's part of my job, is to make sure that doesn't happen too. So you just got to make sure that things are really clear and the lines are drawn. And then we have another thing that, there can't be 2 people accountable for something, period, ever, not one. So if somebody's in charge of financing, there can only be one in our whole company.
You don't like it when they can point at each other and say, "I thought they were doing."
So that's what happens, right? So that's those are habits that people get into, and we're like, sorry, no. Like, whose responsibility is this? Whose responsibility is YouTube?
Ownership.
Period. Like, okay, it's this person. Okay, so then you sit that person down. Do you understand that your job is YouTube? No one else. Yes. Okay. So it's clear. It goes on their accountability chart. Now you can manage to it, and what happens is, a lot of time is, when you bifurcate some of the things that people do, which they like, collaboration, doesn't work. You can't have 2 or 3 people responsible for accounting, or 2 or 3 people responsible.
I think that's great advice.
Yeah.
Yeah. Extreme ownership. It's like, where the buck stops.
That's right. And it's really helpful too when you manage.
If you think back, I'm sure you got a lot of war stories. What were some of the bigger mistakes or things that jump out at you that you're like, oh, I cannot believe this happened? Because I've been sued. I've had employees sue me.
Yeah.
Just the craziest stories.
Yep.
People. I had one lady that was selling reptiles out of the basement as a side hustle business.
Yeah.
I walked in one day and there was a guy making margaritas at 7 a.m. Just getting blitzed. At one of the sales guys, I came in one time and there was like 5 midgets and 40 farm animals in our building. It was like the Wolf of Wall Street. All of a sudden, I'm like, what is going on in here? And it was like, this is such a liability to me, you ding dongs. But the sales guys were wild. They didn't give a shit. I'd love to know, like, maybe some of the crazier stories of, like,
I feel like looking back, it's like the show Hangover.
Oh, yeah.
Like, it's that, like, literally same kind of stuff.
A faced hat and a tiger.
And it's true. Like, all of that stuff, literally all of that stuff. We have right now we have 10,000 tenants, and you can imagine. And we bought in so many properties and had so much stuff going on, so many people, so many businesses. Some that we started, some we closed, all that stuff. There's just so many, and they're just learning lessons. And I think that's the key. You gotta look down. You gotta look back and see where the system broke down. And I think a lot of times people, they point out, well, I always look in. I'm like, okay, so what did I miss? How did I miss that? Like, and how can I not miss that again? And that's what I do. And, I think a lot of times that some of the least effective leaders, they point out, but I think there's a lesson in everything, even, by the way, this is going to be an interesting run we've got here. We just went through, let's say, 10 years of a rising market. Everybody is not used to what's next. So you don't really learn much, in my opinion. You consume a lot, but there's not a lot to when everybody's making money and the salespeople and everybody's high-fiving and you're closing deals and the lenders and the investors and all that stuff are making money. Everybody's just happy as can be, but there's no pain, and you only really learn through pain, in my opinion. You don't really learn a lot. You think, we'll just do that again, rinse and repeat, but it's not always rinse and repeat.
How bad do you think it's going to get? Robert says, we got a 3 times crash. We got the currency crash. We got the stock market crash, and we got the real estate crash. You agree with that?
So I was just at a 3-day event with Robert, literally Thursday, Friday, Saturday, and was on stage with him a lot. And during that period of time with a whole bunch of really smart people like Jim Rickards and George Gammon Andy Schechtman. And so I got a chance to really dig into this whole thing and really listen from their perspective. I do think there are some things that we need to be concerned about. The interest rates, I'm going to chat with George about this, George Gammon. I think the Fed is going to continue to raise rates this year because of the inflation. He thinks that there aren't because of the inverted yield curve. The 2-year Treasury is higher than the 10, which is not normal. Normally a short-term cash usually doesn't have a premium over longer. So that'll be interesting to see what happens if the Fed continues to raise rates. Then I think that we could be in, it could really be a problem. And, we're already seeing, even this morning I was at the gym and a buddy that I saw that I knew really well has a mortgage company out in Gilbert, 19 people. So it's not a huge one, but he shut it down, and moved back to his house. He's been in the business, 30 years, right? And him and a processor and an admin. He goes, that's all I need right now. The lease ended. He closed his shop. So, that's happening, as you know. And so you're starting to see this already. And, consumption's going to go down. I think GDP is going to go down. I think we're going to hit a recession. I do. What Robert's talking about is something a little different. He's really hung up on the BRICS deals, the Brazil, Russia, India, China, and South America, what do they call the BRICS? They're all upset with the dollar. So, and you would like if there's way more dollars outside of the U.S. than there are inside. So, if you're China and you're buying oil from me and I'm paying you in U.S. dollars and I'm inflating it at home and using it as a weapon, like we did against Russia, there's a lot going on. And so I think that what they're talking about is that reserve currency and maybe losing that reserve currency, which is the whole point of the BRICS. So that's what Robert's focused on. And I think you got to take notice on that stuff. I don't know how quickly. It doesn't seem to me like it's going to happen very quickly. But, then you got that central bank digital currency issue and the Bitcoin thing and, and the failing of the banks, which, by the way, if you look at, Silvergate Bank, and which I did business with, they used to be a real estate bank and they switched to a crypto bank. And you got Silicon Valley Bank, let's say. And what was the other one? First Federal, I think it was. Also a crypto bank. So why would the government let 2 crypto banks fail? So you start to piece this stuff together and it kind of makes sense. The federal government's not going to let, crypto slip out of their hands. They're going to create a, federal digital currency, perhaps. At least that's what a lot of people think. I don't know. But in the meantime, the real estate, I think that we're going to have a real issue with inflation. I think people are getting killed right now. And I don't see how, I was talking to Joseph Wang, who used to be on the open markets desk at the Fed. He's speaking at our Limitless conference in June here in Scottsdale that we're doing. And he said that, he goes, getting from 9% inflation to 6%, it's not that hard, but it did take 9 increases. Think about that. Went from 9 to 6, 9 federal funds increases. That's not very far. So getting from 6 to 2, which is their target, that could be really painful. So he thinks that we could see pretty high inflation for the next couple of years. And so that could be 4, 5, 6%.
Makes a lot of sense.
Yeah. And so if that's the case, then it's going to be a problem for a lot.
What are we at now? We're over at 5?
We're at 6 right now. No.
What's the Fed funds rate at right now?
Oh, I think we're right around 5. Yeah.
5.2. Last time they raised Fed funds rate this aggressively was 1994.
Yeah.
And it's wild to see what happened in 1994. Interest rates went up 3.5%. We had high inflation. It was really hard for them. But the economy's so different now compared to back then. This is why they're really struggling.
Yep. A lot different.
Yeah.
I think, it's funny. It makes sense to me if you can't give that much money to an economy or the world, really, from the pandemic and everything, without it being inflationary later.
We printed out $5 trillion and incentivized people not to produce.
Correct. So there's really a worldwide issue.
And they're still doing it. They're still
They
giving
are.
out free money,
They are.
ERC credits and all kinds of stuff. I mean, there's
I
still
know.
a lot of stuff happening.
There's
out
a
there.
lot. There's a lot. And so I, what we're really dealing with for the first time that I as long as I can remember is that we have massive inflation in a lot of countries. And we have recessions and things going on around the world. So the question is when are they going to call ours? A lot of people think we're already in it. But regardless, I don't know that I've ever been through a worldwide recession. And so that could be an issue, probably way over my pay scale, because
how many units do you have?
10,000.
Yeah, you built a financial wall around you.
Yeah.
I feel like, look, maybe they go to digital currency next 10 years or something. You look at like what the billionaires are doing. They're buying farmland.
Yeah.
All the major corporations, they're buying the real estate.
They are.
They're controlling the food. They're controlling the shelter. And this is why I love this podcast. And I'm just like, guys, get your shit together. Real estate is such a great vehicle. There's so many ways to play this game and get involved and start somewhere, but just get involved, because at the end of the day, if you can own these assets and you can build even a small financial wall around you and your family, at least you have something.
That's right.
Versus than being a fucking ostrich and just burying your head in the sand and just hoping somebody else comes and bails us out. And so for you, I'm like,
yeah,
you're kind of good, bro. You're good. You're not. I'm coming to you for help. But I got the guns.
I have a lot.
I got a fucking arsenal going on over here. My friends have a lot of guns. So it's like, one way or another, I'm getting fed.
Guns, gold, and grub.
There you go.
Yep.
Is there anything that scares the shit out of you right now besides the economy?
No. Well, I think Biden probably, to be honest. I mean, I just don't understand
now,
his moves.
Is it Biden a decision he's going to make, or Biden's going to drop dead and we're going to have our first female black president that has the weirdest laugh?
The funny
ever.
thing is I'm not really affected too much about which president's in from a real estate standpoint.
Yeah.
I mean that sincerely. But when I see him cutting off like the Keystone pipeline and bolting out of Afghanistan and some other things like that, I'm like, what is happening? Those are bizarre. So
no respect right now.
Correct,
we don't have a lot of
yeah.
strength and respect.
Yeah,
at least from what we can see.
So I think and I'm not concerned about this, but you start to see cities that I used to love, and I grew up in Seattle and Portland. I used to go to San Francisco all the time. They're scary now, right? These are. I mean, I grew up in Seattle, so I'm like, man,
I visited a friend
horrible.
that has one of the nicest houses in Beverly Hills, and there was like an encampment going on across the street, and they couldn't remove them.
Yep.
It was wild to me, like drug needles and all kinds of stuff. And it's like, these are the richest of the richest people. And they're just, and they would get robbed, and there was nothing you could really do. They'd get re-released pretty quickly,
So that's the stuff that drives me nuts, right? So, and there's not a lot I can do about it, but that's kind of what I'm watching.
Build a financial wall around you and your family, and don't worry about gas prices.
Yeah. And I don't worry about gas prices. I don't. I mean, it doesn't really affect me. Really, I mean, it's more money, but it affects my people that work for me, and that pisses me off.
Yeah, that is a struggle. That is a big struggle.
Yeah,
I was one of the few, and you guys are welcome. All my team members that are helping produce this podcast, you guys are all welcome, because I just keep giving you fucking raises as inflation comes up. Because I'm like that guy, because like I really am concerned for my team members, and I rolled in last year when inflation hit 8%, and I gave everybody a 10% raise that day, because I was just like, look, we're not going to play this game. I'm not going to have you guys stressing out because you can't afford to get to work.
We did the same thing.
It's wild, man.
You have to.
Yeah, you have to take care of your people.
Yep.
Because they'll take care of you if you play the long game with them. Which is why I'm hoping you guys can hurry the fuck up and make me really rich so I can stop working. Greg, Squeak, you got me? All right. All right. So let's just kind of end on a little bit of not a low note. Let's end on a high note.
Yeah.
Right? So look, this game is tough. There's a lot of obstacles and challenges along the way. How do you think about coaching up like somebody who's getting into this space? How do you develop that millionaire mindset? How do you have the strength to bounce back? You're talking about all these instances, so many more than you can even count. It takes a lot of strength to do that. Were you just hard-headed? Or is this like, hey man, I know there's certain success principles. I live and die by these things. If people just mirror this, they're gonna win.
Yeah, like you if you mirror what the successful people are doing, there's a reason that they're successful. They're no different, as you know. Like I know lots and lots of people that started with nothing, and came from really much, much worse circumstances than I came from. And they're super successful because they followed a system. And that's it, and some of it is mindset. But the truth is, when it's the hardest, we just were there. So it's hard when everyone's out there doing it. Like when money seems to come really simply and easily, that's actually when it's hardest, in my opinion, because there's more competition. When it's easiest is when it doesn't look like it. So in other words, when things are going to hell in a handbasket. So I'll give you an example. In 2008, when everything hit the fan, banks were taking on water, and they were clearly taking loans back, and all this stuff, all this toxic real estate, and all these loans were going back all over the place, and everybody's holding on to their capital, trying to figure out what to do, and everybody's equity evaporated. I was like, oh, this is going to be perfect, so I went up to Canada, and I put together a huge financial fund. And started raising money.
So glad you're saying this.
The
right
RSP, the RSP, which is the retirement savings plan, which is our 401k. And I put together a $100 million fund, and I started buying apartments in Texas because the dollar, a lot of people don't think about the dollar between the two countries, but you should, and so all of a sudden the Canadians were going, oh my God, the US is on sale. So I just went up there and solved the problem. So I went up, figured it out. And that got me through the first 3 or 4 years until things started, the bank started releasing their purse strings again, and they started lending again.
$100 million fund's no joke.
Yeah.
That's a big boy fund.
Yeah.
Was that the biggest fund you've done up to that time?
Yeah. Oh yeah. 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 But I bought, I put those deals together individually, but we went up there, imagine, the U.S. was on sale. A lot of people from Canada come and vacate, or vacation, in the United States, and vice versa. So it's just a matter of understanding currency and stuff like so. So back to the study thing, and I'll tell you, one of the things as a kid, I grew up near the Canadian border, up north of Seattle. And I remember I used to take U.S. coins or dollars, and I used to cash them for the Canadian coins, and I would go back, and it was like a 20 or 30%. You know what I mean?
You're just creating money.
You're just creating money. I was like, man, this is awesome. I'd go up there with my dad, and I'd bring as much cash as I could, and I'd come back with 20 or 30% more, depending on what the exchange rate. And along the border, everybody would take quarters. They'd all be mixed in with Canadian quarters and U.S. quarters. So it was like awesome. But I always remembered that. So I always kind of watched the currency. And when currency got pretty close to the same, the U.S. and Canadian currency got almost identical. And so when they invested, we invested in deals that were 30, 40, 50 cents on the dollar. Then when the dollar got stronger, then all of a sudden they made even more. So they made money on their currency. Because when I was giving their money back, I was giving them to them in U.S. dollars that had gotten stronger. And in addition to that, they got the upside of the real estate itself. So that was a win. The currency thing was a win. I could have never projected that, but I knew I was buying on cash flow. So what Canadian is going to want to buy properties in Texas? I still own those, by the way. And what Canadian is not going to want to buy those? And with their strong dollar. And so
it was a brilliant move.
Yeah.
I did the same thing. Much smaller scale. Much smaller scale. When I heard you say 100 million, I was like, I'm not even going to share. I went out to Canada and raised a couple $100,000. But no,
that was true, right?
I actually raised probably a few $1 million, but it was the only thing I can see in my limited knowledge. I flew to Toronto and threw an event that said, come to my hotel ballroom at the Hilton Sheridan Inn or whatever it was. And a bunch of Canadians showed up, and I convinced them to wire me money, no contracts, nothing, to come buy foreclosed real estate in Arizona, because I was down at the foreclosure auction and I wanted to bid.
Yep.
And I couldn't believe how strong their dollar was against ours. And it was a power move. And I got my first probably 7 or 8 Canadians to trust me enough to just, because there's no keys. When you buy at auction, there's no rules, there's no keys. Like it takes
Right.
a month or two to get your little trustee's deed in the mail. So it was really built on trust. And my whole pitch was this, guys, you don't know me, you don't trust me yet, but I'm telling you, real estate down there is on sale for 30, 40 cents on the dollar. I'm going to be your guy to go down there and do it. I need you to wire me money just on pure faith. And I'm going to go to the auction and buy these properties, and then I'm going to renovate them for you. I'm going to put a tenant in. I'm going to mail you the deed when it comes in the mail. And I'm going to, turn over to some property management. And we did hundreds and hundreds of houses like that from one seminar, one day, just trying to gamify that currency exchange.
I did the same thing.
So brilliant.
In Calgary and Vancouver. We even got George Foreman to come. He brought his grill and the George Foreman grill and all the stuff. It was basically a seminar in Canada.
Yeah, brilliant.
With for raising money.
I wish I thought bigger like you though.
Well, you probably do now. I mean, it's just it's just an age thing, as you know. Once you punch through one barrier, that's my whole life's been that way. I grew up just probably like you, where we can't afford this, right? That's exactly what my parents would say almost every time. So I always had to punch through each time.
Yeah, well, I'm definitely thinking bigger now. We're aggressive. We're getting out of single family as fast as we can and moving over to the multifamily. I want to be able to be on your podcast one day and be like, yeah, I did my first $100 million fund.
All right, let's do that.
Hold me accountable to that. Any crazy shit you bought with your insane amount of wealth so far? You just keep buying more apartments with it.
Yeah.
You got a private jet. You got cool cars. You got the watch collection. Like, what is your vice that you just like kind of splurge on?
Yeah, so everything I buy, I don't finance. That's number one. It's funny. I did all the multiple houses and all that kind of stuff. I pulled back on all that. So
because you just matured.
Yeah, I think so. I think I was just, gosh, I'm up here for 1 month, or you're always, and then also it turned into a routine that I didn't like. You know what I mean? I wanted to be able to go do a bunch of stuff, and so yeah, I think I just pulled back. Things are a little different for me now. I'm starting to look, at life a little bit better, a little different. My relationship with my friends and family are more important. My health is more important, and I think sometimes you sacrifice that as you're trying to climb the ladder.
Most people
those
do.
kinds of things.
We've talked about this in a lot of other podcasts.
Yeah.
I think do you think there's a big correlation between health, wealth, and joy? Right?
Happiness? Oh, without a doubt. Yeah. So I'll tell you a great story. I ended up, it's a long story, but I'm actually going to this ranch in 2 days in Texas, where I do a week of personal development. I'm actually going with Kiyosaki. And, there we learn about consciousness and presence and all that kind of stuff. And that took me into the Deepak Chopra camp, which I've been hanging out with and been going to things like that. I'm just trying to figure out, the alternative, to the, crazy stuff. So I used to apply all that to business and growth and leadership and company growth and money and all that stuff. And now I'm just pulling back from that. I'm trying to be a little more balanced.
Yeah. I do believe that a person can be physically fit, financially fit, spiritually fit, relationally fit. I think it is absolutely possible. It's just intention, right? You make your health an intentional focus, just like building any other muscle. You putting in those reps, you're gonna get it. I said this in another podcast, and this is a shocking stat. And I couldn't believe it, that 1 in 10 Americans are considered millionaires in America. 1 in 10 families.
That's a lot.
1 in 25,000 Americans have a six-pack.
Oh, wow.
How many of them are millionaires with six-packs?
Yeah, not many.
I'm one.
Yep.
I want to be that guy, ripped, rich, and rare.
Yeah.
I want to be so fucking aggressive towards that goal of being like, I want to set a standard, because I really believe that my kids are watching, other people are watching. You might not realize they're watching, but they're watching, and you're setting a standard. And how many wealthy people that are chilling at the pool with the rollie on, but they're just totally let themselves go. And they're, they got diabetes or whatever the hell they're battling. And it's just like, come on, man.
Yeah. One of the guys that I study with, his name's Radhagopalan, and he's a world's leading heart transplant guy. So he does 40 a year-ish. cardiologist, obviously, but he has a group that they do kidney, liver, and bone marrow and heart. And so he said, he goes, "Here's the deal." And by the way, he's Eastern Western guy. He said, I've put hearts in people that hold emotion. I put them in someone else, and that emotion comes out of them. And I'm like, what?
Like the heart has memory?
Correct. And he's like, they're my patients. he said, and I said, well, how does a person need a heart? And he said, well, sometimes, everybody wants to say that it's just a health, DNA, genetic, but he said the spleen, the liver, the bone marrow, the heart, most of that manifests from some kind of anxiety or stress or something that you haven't cleared from a long time ago that you've buried. So it really gets, I don't want to go too deep on this stuff, but it's really interesting if you really start to track it. And this is a guy that does it. It's not some guy I watched on YouTube. This was a buddy of mine that I literally, was having a glass of wine with 2 days ago. It'll blow your mind. And he said, you really need to not only be healthy from a food and exercise standpoint, but you need to be healthy from a stress standpoint and how you carry stress.
I love that you're doing some really intensive week-long personal development type retreats, because I think it's important for high-level entrepreneurs to shut shit down every once in a while and just go deeper, work on, I did this last year. So last year was the worst year of my life. Financially best year of my life, emotionally worst year of my life, by far. My mom died of cancer. I'm going through a divorce. Had to tell the kids, moving out, the whole thing was really challenging. Just the worst of the worst emotionally. Now it's the best year so far. It's been because I went and put in so much personal development work and went deeper, and I had to shut everything off. And I went to psychological counseling services in Scottsdale, and I went for an entire week, phenomenal men's retreat, and just went deep. Had open heart surgery on my inner child.
Yeah, that's what you have to do.
It was like 10,000 pounds lifted off my chest. And I know a lot of men that walk around and they don't cry. They're not in touch. They can compartmentalize and bury like the best of them. They're really good at just hiding their pain or using their pain for achievement, or it comes out in the worst ways: addiction, drugs, porn, alcohol, whatever that is for them. And it really is important. If you want to level up, I never understood, how do you get to the next level? And what I realized is you can't. If when you're driving in traffic, somebody cuts you off and you just fucking lose it. Or you react certain ways because of your subconscious programming that you've been holding on from the pain of your childhood or your environment or your experiences. But when you really clear through that and you internalize it and you own it and you work through it, all of those weird reactions you start getting control over, and you start to slow down almost on a cellular level, and you just mellow the fuck out for a little bit. And you're like, okay, I can handle this at much better. And honestly, Ken, I've cried more. I cry all the fucking time now. Dude, church music comes on and it's like instantaneous. I'm like, everybody's looking at me. I don't care. Snot bubbles and everything. I think it's great. But it took me 44 years of complete implosion to finally go deep and work on that shit. So I love this. I want to learn more about what it is you're doing.
Yeah, well,
I think it's great.
I think the ego's ego is the enemy, man. Every one of us is just playing a movie that we've lived. That's all. It's our own. Doesn't mean it's right. So, I think that once you back up from that and you realize that, just because you grew up one way or you did something or, you can literally unwind some of that stuff and take a look at it. I think a lot of times, people's egos keep them right in place.
Would you go back and change anything?
Oh gosh, I think I probably wish I would have been a little open-minded as a younger man, perhaps. And, maybe got into some of the stuff a little bit earlier. The other thing is I think being conscious and being aware makes me a better leader. I don't think I listened like I probably should have when I was in my 20s or 30s. That's what I work on now. And the truth is, like, I was talking to actually Kim Kiyosaki the other day, and she said she was sitting with a friend of hers, and she said, all I did was ask questions the whole time of this lady. And she just talked and talked and talked and talked and talked. And then they got up and left. And she's like, oh my God, I love you. And Kim said she didn't ask one question about me. She doesn't even know who I am. So I think that's pretty normal for a lot of people.
Yeah.
So it's interesting to me, I think, if you can just be a little more aware, a little more conscious. And, and I think a lot of people are, they have a lot of good things to say, and a lot of them are in pain, and they have a lot of stuff going on. So
deal with it. Come on, man. Step your game up and go deep. Have that open heart surgery on your inner child. Get the professional help you need. Get around other people that are doing that kind of personal development journey and attack it like you attack business. Yeah. You'll be a better man for it, a better entrepreneur for it.
And then things start to fall into line too. Like
that's what I was driving towards.
Yeah.
I now understand what the next level is, because I can feel the opportunities are opening in front of me now, that I had my own emotional roadblocks that I couldn't even see them, even if they were there. All right, I end the podcast. Well, first off, tell me about Limitless real fast before we end the podcast with the question I ask all my guests. So Limitless is an event. You guys do it, once a year?
Yes, we do it in June in Scottsdale.
June what?
June 15th to the 17th.
Okay, and it's designed as a wealth building event, or apartments. What are you guys focusing on?
Yeah, it's really not a real estate event. It's more about, I think what happened was my partner Tarl and I, we both made a lot of money, and we're both trying to figure out, like, what do we do with it? And so we have these networks and these groups of people that, are all doing different things. And so like you know how you spread your money around. So the goal was to try to make an event where there's lots of people with lots of different views on lots of different things that are successful. So not necessarily just real estate, even though there'll be a bunch of real estate people there. And then, of course, you bring that economic component in there, and that's where Kiyosaki comes in, and George Gammon comes in, and Joseph Wang. They'll all be there, and just to talk about where they think things are going. And we'll have 50 speakers.
Oh wow!
Yeah, so it's a big event, a couple thousand people. It was a huge success. We sold out last year. And and so like you.
So if they wanted to get tickets, where would they go?
They would go to limitlessexpo.com. And it's all there, and
and there's a VIP experience, I'm guessing. The whole thing. You can
all of that. Yeah.
Like all my listeners just buy VIP.
Yeah.
They don't fuck around in the back. Okay. they leave 5-star reviews. They follow Ken at kenmcelroy.com. They go to, what was it?
Limitlessexpo.com.
They go there, they buy the VIP.
Yeah. So
I got you, Ken.
Thank you.
I don't even want a 5-star review. Just go buy a VIP ticket and show up, because I think it's going to be important that you surround yourself with that type of energy moving into 2023. The world's very uncertain. There's a lot of chaos going on out there, but it doesn't have to be chaotic for you. Look, this is a zero-sum economy. Money's not leaving the ecosystem. It's just changing hands.
That's actually true.
Pick what side of the equation you want to be on, baby. Yeah. And I know real estate's overwhelming. I know in the beginning it's scary. I know there's a lot of pieces of information and it can feel like you're drinking from a fire hose. But when you have great mentorship and you're learning from people that have actually done, I mean, how many times in your life do you get to be around and get mentored by somebody that has 10,000 units, billions of dollars worth of real estate? Like never. This never happens, but we could do it in business if you just get out of your own way and cut the fucking check, right? It drives me crazy when people want a discount or are scared to cut the check. I'm like, why do you want a discount? Do you know the amount of sacrifice I've made to build this business or to learn these skills, and you want a fucking discount? Like, what are you really saying to me right now? That all my sacrifice and hard work and all those challenges and all the times I got sued or pushed around or beat up or passed over or bullied doesn't fucking matter? All those failures that were trial through error, it doesn't matter? You just want me to, like, what are you, entitled? And it drives me crazy. And the other thing that drives me crazy is like, oh, my wife said, I probably shouldn't spend money on that. It's like, well, your wife's going to love the new fucking purse collection when you're balling out in the real estate game, right? She's not going to be complaining about that. when her shoe collection is on point and all her friends are bragging about, she's bragging about all the fun trips you guys have gone on in the last year. It's like, look, get out of your own way. Use money as a tool to go further faster.
That's right.
So show up to the events like this. The biggest needle movers in my life have been events.
Live events are where it's at, man.
By far.
Like there's so much you can learn. I go, as you know, like I go, and I'm just sitting there. I went to this one that Deepak Chopra had just a month ago. I was at every single thing. Everybody's out in the lobby or whatever. I'm like, it's all about health, right? I'm in there taking notes, writing stuff, meeting the guys, trying to get to know everybody. There's so much to learn, and I want to always just refine what I'm trying to learn. And that's what Limitless is. These are top of the game people, all of them. And they're not big name speakers, a lot of them. These are full on baller entrepreneurs.
They're really doing the business.
Yeah,
they're kind of coming out there as a favor to
1,000%.
Yeah.
My buddy who started
Love
California Closets as an example, like you would never know who he is. He's coming. I'm going to do a fireside with him. He sold it a long time ago, but here's a guy that you can ask questions like, how did you, boom, 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 boom. So those are the types of people we try to bring. So, because it's not really a real estate event. It's how do I spread my money around? What's the right thing to do next? And how do I pay as little tax as possible? I have all my tax advisors coming, and they can, they'll be talking to whoever needs to, whoever wants to talk to them about things, strategic things that they can do too to keep as much money as they make.
Well, I'm going to be in Florida during that event, but I'd love to send my business partner Bryant. Right, Bryant? Come on, B. We got Bryant listening in. He's in the background there. My best friend Bryant, business partner Bryant. We did?
Oh, good.
See, I didn't even know. Look, I'm supporting you guys all around.
It's the best. Yeah. How'd you like it?
He loved the event.
Yeah.
We love the event.
Thank you. Yeah.
So hopefully we can get back there again to support, and anybody listening to this, go check it out. What's the website? One last time.
www.limitlessexpo.com.
Man, look at me. I'm plugging away over here, guys, because I do believe that it'll move the needle for you and put you in a room full of other players that are intentional just like you. And at the end of the day, you never know. It's never the whole thing. It's literally sometimes a freaking sentence that somebody says that everything just all of a sudden clicks, and you're like, I'm going to go do that immediately. And the needle for your business moves. And you just keep doing that over and over and over. I've been to hundreds and hundreds of events. I joined insane amount of masterminds. I'm listening to you talk. That's a success principle that a guy that has 10,000 units that now cares about his health is showing up, buying the VIP experience, sitting in the front, taking the notes, not wasting time out in the lobby.
100%.
It's like, I'm intentional. I'm present. I'm here to dominate. That shows you what you should do. Just mirror that. And you're going to be very successful as this next major wealth transfer happens, because it is happening.
It is going to happen.
Whether you want to or not, don't get ran over. Be on the right side of that equation. All right, Ken, thank you for sharing all your knowledge.
Brother.
Man, you're a beast. I really appreciate you. And I'm serious. One of these days, I'm going to get on your podcast. We're going to be talking about my $100 million fund. Until then, everybody, thank you for listening. We don't do advertisements on this podcast, so the only thing we do ask is that you maybe share it with a friend, spread the information around, so that way more people can get turned on to really understanding what it takes to get out of the rat race and live life on their own terms. Until next time, we're out of here. Take care. Comb your hair. Peace. Hey, thanks for being a subscriber of the Clever Investor Show. As a thank you gift, we wanted to give you something that we know is going to help you get started as a creative real estate investor. It's our Real Estate Success Kit, and it's completely free. Just go to www.reisuccesskit.com to customize your kit, but essentially it's a collection of 15 training tools designed to help you get results quickly as a creative real estate investor. From systems to lead generation to finding cash buyers to creative ways to close deals and get paid. Your free REI Success Kit is just a few clicks away. Once again, the website's www.reisuccesskit.com.